Hey friends, today I want to cut through the distractions, whether it's politics, central banks, or speculation, and focus on why crypto was created in the first place, to give power back to the individual. We're going to dive into some key developments from China's unenforceable Bitcoin ban to the rise of AI-backed crypto. And yes, even Blackrock's moves with their Bitcoin ETF. These stories reveal the ongoing battle between decentralization and centralized control, so let's get into it. So back in 2021, China banned Bitcoin, yet here we are, 55% of Bitcoin's mining is still happening within Chinese borders. What's that tell you? Bans mean very little when people find value in something, and here's why enforcement is tough. People will always find a way to move their money to where it serves them best. And Bitcoin offers that option no matter where you live. Chinese citizens, despite government crackdowns, are still mining and using Bitcoin. Think about that. What's more fascinating is that Chinese miners, although they dominate Bitcoin mining, are doing so in a more decentralized manner compared to those miners in the United States, for example. It's ironic, right? We often fear the centralization of Bitcoin mining, yet China, a country known for tight control, has a more decentralized approach to mining than the US does. And that is not a mistake. Centralized control breeds decentralization if that is the goal. Now, this shows us that while governments can dictate laws, they can't necessarily dictate people's financial choices when alternatives like Bitcoin exist. There's a difference between legality and morality, and sometimes people will choose the latter even if the former says otherwise. Now let's talk about AI. The intersection of cryptocurrency and AI is getting more attention, especially with projects like Fetch.ai, which are gaining traction after support from, believe it or not, people like Kamala Harris. What's powerful about these decentralized AI projects is their ability to self-fund, breaking away from the grip of centralized corporations. But here's something worth noting. Blackrock and Microsoft, two massive institutions with interconnected shareholders, are pouring $30 billion into AI data centers. This isn't just an investment, it's an attempt to control the very development of AI. And guess what? The same companies, BlackRock, Vanguard, State Street, are all the top shareholders of companies like Microsoft and NVIDIA. This means they have the power to influence how AI technology is shaped, especially when it comes to applications in finance. Think about the future. Do you want AI development controlled by the same institutions that already control global finance? Or would you rather see AI evolve in a decentralized way, free from these corporate overlords? That's why AI-based crypto projects are so important. They give the power of innovation back to individuals, not corporations. And we need to be vigilant about where the future of AI and crypto is headed. Now let's talk about BlackRock and their Bitcoin ETF. A lot of Bitcoin investors, rightfully so, are raising red flags around the role Coinbase plays in this, particularly regarding speculation that Coinbase might be issuing what we call paper Bitcoin for BlackRock's ETF, instead of purchasing real Bitcoin that can be traced on-chain. So what does this mean? Essentially, instead of actually buying physical Bitcoin and storing it in a provable way, there's concern that Coinbase is using a fractional reserve system where they issue claims on Bitcoin that don't fully match the amount of real Bitcoin that they actually hold. This type of practice, if true, creates a massive liquidity risk and undermines the very principle of Bitcoin's transparency and scarcity. For those of us in the crypto community, this is a serious concern. One of the biggest selling points of Bitcoin is that you can verify every transaction on the blockchain. There's no need to trust institutions because everything is publicly auditable. But if Coinbase is issuing paper Bitcoin, essentially selling you something without actually holding it, then that entire principle of transparency falls apart. Now, considering BlackRock's involvement, this concern escalates. BlackRock's ETF is poised to be massive, and if it's based on paper Bitcoin rather than real on-chain Bitcoin, it could manipulate the market. And maybe that's what BlackRock wants to do, because that's how traditional finance has operated for years, through fractional reserves, lending out assets they don't fully own. But Bitcoin was created to get away from that system. So as an investor, you need to ask yourself, is this ETF truly buying Bitcoin, or is it just another instrument of control? With blockchain technology, we have the tools to track and verify Bitcoin ownership. Don't let these institutions obscure the truth. Trust the blockchain, not just the narratives coming from the financial giants. What we're seeing in these developments, whether it's China's failed Bitcoin ban, BlackRock's moves in AI, or their ETF maneuvers, it's a fight for control. And the more centralized forces fight to keep their hold, the more it proves why Bitcoin was created in the first place, to decentralize power and give it back to the individuals. So you got to ask yourself, are you ready to take control, or will you let the same institutions that already control so much continue to influence your future? That's it for today's episode. Thanks so much for watching. Hit like and subscribe. If you want more information on what we're doing with our own cryptocurrency investments, no better place to look than learningcrypto.com. It's also, we're building it out to be an amazing resource for those of you who want to learn the right way of how to initiate your journey into this cryptocurrency space. We got your back.